My name is Mark Goodwin. I am the editor-in-chief of Bitcoin Magazine. I've been writing about the Bitcoin space for years, been in the Bitcoin space for years, and I have some alarming news about the co-option of Bitcoin by the same powers that have co-opted the financial system through very interesting means of obfuscation of ownership and settlement and tokenization, paperization. So Bitcoin is a decentralized peer-to-peer electronic cash system that was invented by a pseudo-anonymous coder. Satoshi Nakamoto came out and right at the end of the start of the financial crisis in 2009. And it basically is it's a stable disinflationary monetary policy that is decentralized in its governance through nodes all across the world. That's supposed to be this jurisdictional agnostic monetary system for people that want to avoid the debt pardoning powers of the state, that they can verify their own transactions, verify monetary policy, and be able to audit the chain and the financial system, on their little computer in their home. And so basically, the way that Bitcoin works is it's a distributed timestamp server. So what that means is that if you want to know that your transaction was settled, you need to make sure that when you submit a transaction that it gets basically inscribed into a ledger that cannot be changed, that's durable and immutable. And so Bitcoin is this very complicated system of governance that basically uses hashing algorithms to create a string of blocks that all are related algorithmically to the block before it. When you make a transaction in Bitcoin, what you're really doing is you're purchasing data, byte space, in a Bitcoin block. A Bitcoin block is just 4 megabytes of data that goes up on auction on average every 10 minutes. And so the market goes, hey, there's a new block that can be made, and if you have Bitcoin, you pay a fee that is to buy up the bits in this 4 megabyte block that allows the spending conditions of your transaction to be immortalized in a blockchain forever. So you're actually just paying for the information to say, this is my input, this is my coin, and this is who I want to pay, this is my output, and I'm signing that I have the rights to this input to send to this output. And that is all a Bitcoin transaction is. It's an input, a signature, and an output. The Bitcoin blockchain, every 10 minutes, there's a block of, 4 megabyte block of usually, a few thousand transactions. And each transaction is then hashed into a block, a header out that that then becomes the header of the next block. So it uses cryptography and this hashing algorithm to, basically it stores all of the transactions in a hash that then goes to the next block. So if you went and tried to change a transaction in the previous block, you would get a whole different block header for the block you're currently working on. And so it's really not even a blockchain as much as it's like a hash chain. And so every transaction is stored in this hash that then becomes the header of the next one. So it becomes this big string of header after header after header, and it creates this big string of immutable, durable transactions that can't be changed. You go back 100 days and try to change a transaction, and it changes every single block ahead of it. You cannot change a transaction once it has been settled in a block. There were a ton of iterations of digital money before Bitcoin. But all of them had some issues. They had some issues with trusted third parties. They had issues with inflation. They had all of these issues. Bitcoin was the first one that used a blockchain. It was the first invention of blockchain that created this universal state that could be validated by all nodes across the world, that could validate economic policy and transactional settlement at the node level, at the individual level. It's a state change of money. It was the first technology to be able to do that. And it's a state change of money to have this ever updating ledger that isn't controlled by any one person or any one entity, and that has verifiable economic policy. After Bitcoin, there were a bunch of other iterations of blockchain, Ethereum kind of being the biggest one, that uses different algorithms, different consensus models. But all of them generally have this idea. They're called blockchain technology because it's stringing together this database. Every 10 minutes in Bitcoin, every 1 minute in Ethereum, yada, yada. There's tons of different mechanisms now. But everything that they do is they tie together using hashing algorithms, a database block, a database, and you can use these databases to put in identity numbers to connect anything, a dollar token, an NFT, a non-fungible token for a piece of art that declares ownership over a JPEG. You could do an identity system like a driver's license that uses basically an identity number that's hashed and stored into a blockchain.
Essentially like an ID number.
Exactly, like a QSIP. Larry Fink says that. Everything will have a QSIP. We'll use this universal ledger that to tokenize everything. And if we can ETF a Bitcoin, what else can we ETF? And he's painting this future where everything has not just humans, but every single object in the world has this QSIP, which is this number used in North American trade for identity of real world assets. Everything will have a QSIP. Everything will have a digital identity. And we'll be able to connect, this Internet of Things and be able to verifiably, immutably, contain this current state of every token, of everything into some universal ledger that's immutable and verifiable at the node level. When I see these people making these comments, I get worried, and I think that Bitcoiners should talk about this stuff, and we have a financial incentive not to, because it's like this number go up thing where it's like, well, if we don't talk about the dollarization of Bitcoin, we can just all get rich and Larry Fink will pump our bags and everything's great. But I don't want Larry Fink to pump my bags. To me, this isn't about just making more dollars. This is about having an alternative system that is out of the hands of these corrupt, miserable cartel cronies that have manipulated the world through currency and interest rate manipulation for centuries. And I don't want to make money off of those people. I don't want to be another identity QSIP integer in a ledger. I want to be human and I want to be free. And I think we can use this technology to free people and we can use it to enslave people. And it's a real thin line between enslavement and freedom when it comes to digital technology.
In the same way, could this be showing people, hey, look, there's this liberating side to it, and having them only focus on that and not look at the downsides of the technology or the way it could be misused to hurt freedom?
Yeah.
Here's my question. Has there been enough appreciation in the crypto space of people to talk about the downsides of the technology?
No, not even close. Not even a little bit. I mean, people literally cheer on, there's these things called stable coins, and people literally cheer them on as a human rights tool because people that have bad fiat currencies, like in South America, that, like in Argentina, where the peso is hyperinflating, it's like, well, thank God, these poor global South, folks can get access to bank accounts and they can use dollars and they get tethers and they can use them, and it's this wonderful thing that they can defeat inflation at their level. But it's like the dollar is a financial weapon that the U.S. dollar system spreads across the world. It wants as many people to use it as possible. This idea that it's this financial freedom technology is insane. It's like highly surveilled, highly controlled.
What does QSIP mean?
QSIP is it's an identity number that's used in like a lot of North America trade. That's basically like every ticker on the NASDAQ or whatever, New York Stock Exchange, has a QSIP. That's this
ID number?
ID number, basically. So, the U.S. Treasury has one QSIP. A Tesla stock has one QSIP. It's not like each Tesla stock has its own QSIP. It's the whole issuance has one, and then you use that to trade. So you could update any ledger and point to the QSIP and say, hey, this represents a trade of 30 stocks of Tesla traded for 50 GameStop, assets and what, and you can use this identifier across all of these different brokers to settle, security trade.
Can we just elucidate the technology a little bit?
Sure. Yeah, Bitcoin, again, I think the way that it was released, right, it was released anonymously into this cypherpunk mailing list. At this, again, a very important time in U.S. dollar history, right? It's the great financial crisis is like peaking. And it's released by this anonymous figure. And, it's basically immediately painted as this anti-dollar system, anti-central bank technology, because it takes away the ability for debt pardoning. And the way that it does that is it has this issuance schedule, this monetary policy that for the first time ever in financial history, there's a verifiable, auditable supply and issuance schedule that's coded into every node, coded into the beginning of Bitcoin right there in the Genesis block. There was, a hard cap of just under 21 million Bitcoins that could ever exist.
And plus people lose them. Like I lost one once.
Absolutely. Totally. And if you lose them, it just, the remaining pie gets just, more valuable.
So it should even go down over time.
Totally. 100%. Yeah, there's a lot of responsibility in Bitcoin. You got to hold the keys. You got to do some things. There's no Bank of America help desk to call and say, "Hey, I lost my debit card. Can you refund the transaction?" There's no refunding in Bitcoin. That's actually an interesting thing too. That's the way that people use it as a currency. Like there aren't chargebacks, and that's actually an advantage for certain types of markets. You don't want people to be able to fraudulently say, "Oh, hey, charge me back." You can't. There's no chargebacks in Bitcoin. You can send them back willingly, but there's no Visa, MasterCard payment provider that can just zoink it back. But anyway, so basically there's this universal state that's upheld by all of these nodes. And they run this software. Bitcoin is just software. It's a protocol. And you run this software that upholds this ledger that has these databases within the program when you download it. And it actually syncs and downloads every single block and verifies every single transaction that's ever occurred in Bitcoin, all the way back to the Genesis block, complete fidelity, all the way back to the Genesis block. And your node itself parses through everything and validates every transaction, every block, and also downloads a UTXO set, an unspent transaction output set that contains every existing denomination of Bitcoin that exists. Bitcoin isn't an account-based system, it's a coin-based system, which is very different than like Ethereum or your checkings account where you have a balance that pluses or minuses and up. It's more like denominations of bills, which is very important as we get into how CBDCs work and how they're pitched against us. And they're, a direct issued CBDC, you could argue, is not a base money because it requires a third party to settle it. Whereas Bitcoin, there is no trusted third party. That's the whole point. Settlement is done at the node level and it's verifiable at your node level. You don't have to trust anyone to settle because it is this UTXO model, not an account-based model. So Bitcoin actually is sort of this digital scarcity that's never really existed. It's verifiably capped in a near infinite universe, basically. I mean, it is a state change of money in a lot of ways. But again, it's positioned as this very libertarian movement right from the get-go, and now we're seeing it being very, the orange carpet is being rolled out for Bitcoin to join the BlackRock brand and join the Fidelity brand, and JP Morgan Chase is the authorized participant of the BlackRock ETF. And are they adopting Bitcoin because they want a decentralized currency, or are they adopting Bitcoin because it creates, basically manufactures consent for humans to, get used to digital currency and get used to these assets being stored on this universal ledger. And so Bitcoin, you could argue, potentially, came from some sort of intelligence, came from an understanding that the U.S. dollar system is about to become on a runaway debt machine, where now our debt service, just servicing the $34 trillion of debt that the U.S. is currently in, is outpacing the growth of our GDP in a year.
So you think it could be an insider game to shift it to a global unit?
Yeah, absolutely. Well, now we're seeing these huge ETF issuers and these huge institutions, and they're bringing in, you look at the Bitcoin that's held, that's held by treasuries in the United States. And I mean, it's almost a million Bitcoin, not $1 million, but 1 million units of Bitcoin between, the 250,000 basically that the DOJ holds, the 200,000 that MicroStrategy, this publicly traded company, holds. We have just under 500,000 Bitcoin held by the Grayscale BTC. That's now been converted to a spot ETF. And then BlackRock and Fidelity are over 200,000 Bitcoin now, just since the 11th of January of inflows. So we're seeing an incredible amount of Bitcoin coming directly into the most highly regulated players in the most regulated financial system in the world, which is the U.S. system. I mean, this isn't, if Bitcoin was really this anti-dollar mechanism, there's absolutely no way the SEC would approve spot ETFs. On January 11th, at the start of 2024, after years of SEC debate and private capital debate, we saw 11 spot ETFs approved. Kind of the most important, sort of biggest signpost of that approval within these 11 was the iShares BlackRock spot ETF Bitcoin. So Bitcoin has always been sort of, colored as this anti-state revolution and this total rejection against the powers that be, the financial elite. And here we have probably, the most important asset manager in the world in BlackRock coming out and ETFing Bitcoin, to use their CEO and founder's terminology. Larry Fink's we ETF to Bitcoin, and so they created basically a paper market for Bitcoin within the regulatory arm of the United States. And yeah, it's a huge change for Bitcoin because they've sort of feigned for a really long time that the U.S. was at an extreme disadvantage because of Bitcoin, and that Bitcoin challenges the dollar and challenges the financial elite that have sort of grown around the money printer in the United States. And now we're seeing a sudden pivot and phase shift and massive approval, literally, of Bitcoin within the some of the most important regulatory arms of the United States. Larry Fink himself came out on CNBC and talked about the spot ETF approval, and said that he sees it as this as this asset and not a currency. And he specifically says it's a storage technology for assets. And let's use this wonderful decentralized ledger and this updating database to store updated states of other assets that we trade. And we use Bitcoin not as a currency, but we use it as an asset that stores other assets, this universal ledger that connects everything.
What is a universal ledger? I mean, is that creepy or what?
Yeah, it's really creepy, or it can be creepy. I mean, a ledger is just, it's a dumb tool. It's just a database to store numbers and letters. That's all a database is. It's something that just stores information. Or you could have a universal ledger that contains the state of every single human on Earth, where they are, what color their eyes are, how tall they are, what their body mass is, how much money they have in their bank account, how much land they own, how much carbon they output, how much fuel they've used, how far they've traveled. But it also can contain, mass surveillance that, data points that they can use to, basically watch the herd and control us in any ways, whether it's a vaccine passport, whether it's, what schedule you are on your tetanus. They can use it for health records, biometric records, fingerprints, any sort of identification that can be boiled down to bits, which, due to information theory, just the basics of it, anything can be reduced to bits. And Larry Fink is talking about doing this in a serious way. And he is literally straight up saying, if we can ETF a Bitcoin, turning ETF into a verb, if we can ETF a Bitcoin, what else can we ETF?
And what does that mean? That means ID everything and tag everything.
Yeah, if we can turn everything into an exchange-traded fund, if we can turn every asset Bitcoin spends all of this energy, all of this programming, willpower, and all of these people working to make this beautiful decentralized system that exists on all of these nodes that can be verified, on a Raspberry Pi on very little energy in the middle of the desert, right, with very minimal internet connection. They take all of that and they reduce it down to a paper share that's issued by BlackRock, right? I mean, they just totally reduce all of this complicated, unbelievable, technology of database decentralization, and then they just turned it into a paper share. This is something that people always talk about with Bitcoin versus gold. They talk about gold's, borked, it sucks because it's paperized, and the price mechanism, the price discovery of gold is paper markets. And, JP Morgan paid almost $1 billion fine for spoofing silver and precious metal markets, at the turn of last decade. Now these very same people are using the exact same mechanisms and making paper Bitcoin. They're going to be able to control the price of Bitcoin through those same spoofing, same mechanisms that they use to spoof the precious metals market. And what Larry Fink is basically saying is, well, yeah, sure, Bitcoin's cool as a currency, yeah, sure, whatever. But really what it is if we use that state, that distributed ledger, and we use information theory and we use those bits and we shove arbitrary data into this state, we can actually use the ledger that normally you would think of as Bitcoin transactions, and we can use that ledger to store account balances and data and QSIPs and identity pointers to real world assets, and store them via Bitcoin as this technology for asset storage, as he said.
And is he saying make Bitcoin as unified ledger or some other unified?
I think he could be referring to some, there's a lot of private entities that have created their own, private blockchains. JP Morgan's Onyx, for example, that does reverse repo security settlements using basically an Ethereum fork. But I think he really is understanding that Bitcoin is the only decentralized state, the only decentralized ledger. And so that there is an advantage to using the same time stamping technology that upholds Bitcoin, use those same properties of information theory to verifiably and durably and immutably store, these identifier pointers for real world assets. There's this big dialectic phase shift where Larry Fink and BlackRock has really been a part of this kind of ESG movement, this idea that carbon credits and climate change has to be fixed via the free market, basically. And so he's set up and done all of this work, setting up this ability to regulate carbon markets via these risk management computer systems through these ledgers that he's created. He has this Aladdin system that is the back rock of BlackRock that holds up trillions and trillions and trillions of dollars, huge amounts of investment in kind of green finance, green capitalism, and has basically straight up said this isn't a woke thing. Climate change is not about being woke. It's about profits. And then really, downstream of profits, it's about control. And if you can control these markets and you can control people through, incentivizing, jumping onto this universal ledger, how do you get people to opt in to this panopticon of surveillance, to carbon markets, to the tokenization of everything? How do you get the consent to do that? Well, you have to give them, there has to be some triggering moment. So there's a couple things that has to happen. You have to basically turn this from being, this government, public sector, socialism, thing to being this, no, this is the free market. This is a libertarian capitalist movement to tokenize the carbon in your backyard. And so it cheers on the sovereign individual to come in and join this system. And literally they're going to pay us to jump onto this ledger. Pennies.
Is that the rise in Bitcoin price you're referring to?
The rise of Bitcoin price, but also the way that they're dollarizing Bitcoin and using other blockchain technology to basically dollarize the world. Whether it's Bitcoin at the exchange level, the ins and outs, basically creating the same mechanism they created with the petrodollar, monopolizing the ins and outs of the oil trade. You have to buy dollars or sell dollars. They've basically done the exact same thing to Bitcoin. The other big thing about Larry Fink is immediate. 4 days after the start of the Bitcoin ETFs, I believe it was 4 days. They announced a partnership with GIP. Excuse me. BlackRock announced a partnership with GIP, which is like one of the biggest infrastructure companies in the world. And he came out and he said, the future of private equity is investing in infrastructure. And that's where all of these ETF and all of this funds are going into energy and going into roads and infrastructure for, industrializing, modernizing nations. And a huge part of the decentralization of Bitcoin is that it relies on these infrastructure situations, these infrastructure bedrocks to remain decentralized, whether that's the internet, whether that's the energy that goes into these big mining rigs. So much of the decentralization of the ledger of Bitcoin is based on infrastructure. And now we have the biggest, player in these markets coming in and saying, we're buying up infrastructure. We're buying up the telecom systems, the fiber optic cables under the ocean, the satellites. We're seeing that everywhere. This huge move towards privatization. And that's totally in line with this control system using this universal ledger. How do you control the universal ledger and make sure it doesn't get out from underneath them? You control the infrastructure that exists underneath it.
That we're seeing the digitization, financialization of everything into one unified world ledger.
Absolutely. The IMF and the World Bank has come out and said by 2030 that real world assets will be a multi-trillion-dollar industry. And there's some arguments about if that will be by 2030 or will be even earlier, like 2027. I mean, literally, there's conflicting reports that keep coming out where they're like, actually, the World Bank says it's going to be 3 years earlier. But there's this giant push towards this idea that real world assets, RWAs, are going to be the next big thing in blockchain technology, and that's where the puck is going. And
You're saying tokenize everything.
Tokenize everything. Tokenize the world. And the
so
way
what does that mean? Like you put a tag on everything?
Yeah, tokenizing the world means that there is a number for every single thing that exists. For a block of gold that sits in a vault, to a Bitcoin wallet address, to the square meters of rainforest that's owned by this green company. Anything that can exist in the world that they want to put on a ledger to be able to speculate against, trade against, and then they'll be able to take it and say, I own this, and it's worth this much in dollars, and I can use that collateral and then loan it out to someone else, and they'll fractionalize the world as they tokenize it.
Could the release of Bitcoin been a way to test and prototype the tech and get people to adopt it, making money off of it?
It's incredibly likely that Bitcoin was an intelligence operation that came out of the US or Britain or, some sort of kind of the Five Eyes kind of system. It's entirely possible. I mean, there's a lot of connections with certain algorithms to the NSA. SHA-256, which is kind of the main hashing algorithm in Bitcoin, was invented by the NSA. And so I think you have to be open-minded to the fact that perhaps Bitcoin is the reverse Trojan horse to get us all to get onto a giant universal digital ledger. And so I urge Bitcoiners to absolutely stop and think about what it is that they're building here. What sort of systems are you embracing? Are you just trying to build stablecoin dollar denominated instruments that live on a ledger that is Bitcoin and not actually use Bitcoin at all? Why? Why is that the scaling solution for Bitcoin that's being promoted by the biggest companies and biggest media spots in Bitcoin? Either way, we should push back on this trend, and we should realize who these players are, who these people are that are embracing Bitcoin in this huge way. They're the dollarizers. They are the colonizers of the deflationary world, of the decentralized world. They're here to take over your ledger and incentivize you to come join them by paying you UBI through your decentralized ID of some stable coin, so that you agree to their system. The quiet parts are being spoken out loud, and so they're going to manufacture consent to use their system. That could be Bitcoin. It could not.